Hi, good evening all. In this class, we are going to discuss about common size statements. These are the technique of financial statement analysis, and we already studied the first technique of financial statement analysis. It is comparative statement, and in that we are discussed the comparative balance sheet and a comparative income statement. And here we are going to discuss about the common size statements. It is the second or another important technique or tool of financial statement analysis. We know the common size statements are the financial statements. These are shows the items are converted into percentage taking some common base. In these common size statements, all the items, that is in the case of common size balance sheet, the balance sheet items are shown in percentages. These statements are also called 100% statements or component percentage. And these are so because every individual item is stated as a percent of the total 100. And the important objective behind preparing these common size statements are to provide for a common base for the comparison. For a company, it is necessary to compare the balance sheet of to know the financial statement or to analyze the financial statements. It provides a basic common base for their comparison and to present the changes in various items in relation to net sales, total assets, or total liabilities. And another important objective is that to establish a relationship between various items of the financial statements. And in this common size statements, the first one is common size balance sheet. And in this common size balance, or it is a statement in which each asset is shown as a percentage of total asset and each liability and capital as a percentage of total liability and capital. And thus the balance sheet which is converted into percentage form is called a common size balance sheet. When a balance sheet or the items in a balance sheet that are converted into percentages, it is called common size balance sheet, and it is also known as percentage balance sheet. These are the important steps involved in preparing the common size balance sheet. In the first steps, the total assets are to be taken as 100, and similarly the total liabilities and capital also are to be taken as 100. And the second step, each item on the asset side is divided by the total assets and then it is multiplied by 100, and thus the each item of the asset is expressed as a percentage of total assets. And the third stage, each item on the liability side including the capital is divided by the total of liabilities and capital, and then it is multiplied by 100. Thus each item on the liability side is expressed as a percentage of total liabilities and capital. So in a common size balance sheet, the balance sheet is reduced to the total of 100 and each item is expressed as a percentage of this total.